Hi, Ron Benning, real estate investment expert, and today we're going to talk about whether there's a market crash coming or not.
Now, just remember that this thing isn't as black as it appeared. I have some news for you, folks.
I couldn't help but want to make this video because I keep seeing these sensationalized stories in the media every day, and I think a lot of people are going to be misled about what's happening in the real estate market and what is going to happen over the next 6 to 12 months. What we're going to try to do in this short video is we're going to talk about what makes market changes and give you the tools and understanding to be able to interpret these things as they're happening, because changing markets leave evidence. So the first thing that I want to do is I want to talk about what changes markets. So there are national things that affect markets, like interest rates and wars and things like that. But for the most part, all real estate markets are local. And what is happening in your local market will be the overriding factor that you need to be considering. In local markets, what drives the markets the most is what the local economy is like. What's the job base? Is your population growing or is it getting smaller? We have an acute shortage of housing and multifamily properties across the entire country, and that isn't likely to change anytime soon. Irrespective of any negative news that you're going to hear, it all really always boils down to supply and demand. Any of you that have been watching my videos the last few years know that I predicted more than a year ago that there was going to be a market adjustment, and I haven't changed my mind on that. In fact, in many local markets in California, like San Jose and San Francisco, Sacramento, we've already seen anywhere from a 7 to 15% decrease in values since the peak of about January of 2022. In the last 100 years, real estate values have went up by about 4% per year. And it doesn't go straight up. It goes up and down in oscillating waves. And so when we see a market going up by more than 4% in any given year, year after year, eventually it's going to pull it back down towards that average. So changing markets leave evidence. So what you're going to want to do is, you're working with me or one of my real estate investment team members, you're going to want to look at some of the statistics that we can provide to you that show that that evidence of change is happening and how fast it's happening. We're going to want to look at the average days on the market. Is it going up? We're going to want to look at the average sale price compared to the original asking price. If that's going down, that gives us an indication that we are in a market that's going down. One of the more important ones is we want to look at the active listings versus the sold listings to see if there is a gap in expectation. If we see the average list price going up while the average sale price is going down, the bigger that gap, the greater the chance that there's going to be a decline in price. And lastly, we want to look at the absorption rate. If we have less than a 3-month supply, irrespective of what you're hearing anywhere else, we are in a seller's market. If we have 3 to 6 months inventory, we're in a neutral market. And once you get above 6 months inventory, we are in a seller's market. But what I see as the biggest mistake is people making a false assumption that there's going to be another 20, 25, 30% correction over the next year. I just don't see that happen based on supply and demand. And it's possible it could happen. And for the people we're working with, if it does happen, it won't be a surprise, because changing markets leave evidence. Don't let emotional, sensationalized headlines keep you from making informed decisions.